right, welcome back to REI Hot Seat, guys.
Different setup.
I know I was going to say, whoa,
Right?
bit of a different layout today because we do have a very special guest.
Yeah. How
So,
exciting.
yeah. So I'll let Dave, if you want to do the honors, you can
Well, let's make sure I
make
say
the
the name
intro.
right. Okay, Sam Castillo.
Castillo.
I screwed it up. We practiced before, so I'll get it one day. So you are our, we're going to call you our resident insurance expert. I know you wear many, many hats, but the goal of what we want to chat about today, first of all, is just kind of hear a little bit about you, what got you into the insurance industry, and then just see as much value as we can kind of pump out to our listeners about the often confused world of insurance and often the afterthought, which we know is not the right strategy. So anyways, kick it over to you. Tell us a bit about yourself and how you got into this.
Yeah, first of all, thank you guys for having me. Really appreciate it. I drove in from London this morning and it's
Right on.
rainy, a little
Yep.
touch and go a little bit, but we made it here in time. So really thankful to be here with you guys. And a little bit about myself. So I'm from, I always like to give the shout out to my people from El Salvador, from the Sunshine State of El Salvador, and came over here, was born over here in Montreal, and came to Hamilton when I was 6 years old. So I was raised in the good old Hammer, just down the street from us here right now. And then I moved to London when I was 18, 19, and went to school and had a really good time. And if you know anything about London, London's a great time to go.
Yeah, it's a party school. Yeah. Good schools, but also good at partying.
Yeah. So I enjoyed that, and then eventually broke off into insurance and haven't looked back in 15 years in the making. And
Amazing.
Yeah, so it's been a really fun ride.
Amazing. And just touch on briefly, we're going to talk multifamily insurance, but you do a lot of other styles of insurance. Maybe you can just touch on that.
Yeah. So pretty much, so at the office, we do anything from, your personal insurance, your auto, your own, your life insurance. In the last 3 years, we've really focused on investors. We found that space was, there was a gap in that space that we could fill. So we really, focus on investors from the real estate space and from the life insurance perspective as well, from a tax lens and a holistic approach. How can I have tax efficiency in my corporation? And it really works harmoniously with our clients because they need someone that understands them. And we also invest ourselves. So we purchase apartment buildings ourselves, and commercial buildings. So we have that, we have that understanding, which is pretty unique, which makes our clients' lives a lot easier.
Yeah. I'll try not to get too excited because as I told you before, so my role in my life before, multifamily was, I was actually the director of tax and estate planning for Sun Life, where flew around Ontario and talked specifically using corporately owned insurance as an investment vehicle, which I know you do very well. So what's cool is as we sort of bring clients your way on the multifamily side, I think that's a nice holistic way to deepen the conversation because people don't really know what they don't know. You have excess reserves being built up in a holdco, and what do you do? Oftentimes multifamily is a really good option, but there's definitely, in most circumstances, it's not an all or none.
Yeah.
Especially a great example.
Yeah, I think the last couple of years have shown how especially important it is to diversify and not get yourself to empty gas tank when it comes to cash, right? So it just, there's a lot of different ways to skin a cat, but it's been especially important the last little bit to understand your tax efficiency, especially with the times that we're in right now with taxation and how they're clamping down on a lot of people right now. So I'm sure you've experienced it, or you know someone that's experienced it. So tax efficiency is super important, and especially when your portfolio is starting to grow, there's some tax liabilities there that we have to think about as well. So it's been
So maybe we can just, from a high level perspective, and I'll keep it vague on purpose, give us some ideas of people looking at multifamily. They go to get insurance, as I said at the onset, but a lot of it's an afterthought. So what are you seeing? What are some things to avoid? Like just high level, knowing what you know, what would you kind of want to pass on to the...
Yeah. So when it comes to multifamily, it's especially unique because when we're dealing with investors, typically they're buying something and they're fixing it up. like they're fixing up the top four things that are important with insurance is you're looking at your plumbing, your electrical, your roof, and your heating system, your furnace, your boiler, right? So those four things are typically being updated, and those are the main factors. Other factors when it comes to insurance would be the type of build it is, right? So if it's concrete, you're going to get a lower premium per thousand. If it's wood, the chances of it, a little fire turning into a devastating fire is the likelihood increases multiply. So the insurance is higher. So when I started to hear, that they're letting us build more wood and more frame, to me, it was a little bit of a concern because, that tends to open up the risk to, more flooding. If the flood happens, mold issues, that type of thing. But those are, typically, the type of build it is, the updates to those four facilities, your roof, your plumbing, your furnace, your electrical, those things, and age as well. We're starting to see a lot of insurance companies start to pull out of older buildings.
Yes.
So you're seeing some friction with investors having a harder time to get insurance. So it's especially important right now, especially when the chips are on the table, interest rates increasing, rents decreasing, to have yourself aligned with someone that understands you as an investor, but also has the capabilities and the ability to give you those solutions when it comes down to not fitting in a box. So right now it's more important than ever to not just have your dad's insurance guy,
Yeah.
it typically was a trusted person, right?
Yeah.
If you're an investor, you want to deal with someone that does this every day and
Yes.
has gone through those hoops and now knows.
Yeah. I resonate with that one. The dad's insurance guy or the mom's insurance guy, right? It's just, it's like, I've dealt with that so many times with clients. They're just like, well, I'm using Andy, right? He's 85 years old and half retired. And it's like, oh man,
He doesn't multifamily.
Can we get a couple quotes?
we get the same. I mean, it's not dissimilar from mortgage brokers, right? Like, they'll go in and they'll go to the bank and it's like, well, the bank probably won't finance or be as interested in financing this as,
or if they do, there's possibly more competitive rates, different ways to structure it. And that's why we always want to go with the professionals that trust that, right? A couple questions. So when Dave and I are running through, evaluations of buildings, as we normally do, right? A big conversation point, because so with CMHC underwriting is what we usually do. And with CMHC underwriting, the underwriting guidelines indicate use the actual insurance figures for the purpose of a CMHC mortgage. What I've run into, and I'm sure what Dave, you've run into in the past, is when you look at those insurance figures, you say, okay, but what are they insuring? How are they insuring? Case study, for example, I have a building I sold recently, 1920s stick frame and brick, right? And the insurance on the thing was like $2,500, right? And during our investigation and due diligence, we find out the thing has knob and tube active through the whole building. And so when we originally underwrote the insurance, right, I'm going, 2,500 seems a little light, not even worried about knob and tube, right? And so I'm getting to the punchline here, but the something that I find really helpful is if you can give us a kind of an understanding of ballpark, right? We're not quoting you. I'm not saying this is the gospel, but I'd love to know, hey, when Dave and I or our listeners, viewers are underwriting properties, is there a insurance standard and I know you mentioned brick, concrete, furnace, right? That's all different, but is there kind of a range you can give the viewers to say, hey, when underwriting, that 1920s knob and tube building, let's leave knob and tube out of the conversation because that's gonna be a little more complicated. But
my heart breaks a little bit.
Yeah, the older buildings or the owner that's had that building for 50 years and he's been with the same insurer, and maybe they, now renewing the insurance on that might be very different than what's being advertised. Let us know about that if you have kind of a ballpark or rule of thumb, perhaps.
Yeah, you hit it nail around the head right there, because it's so important that you don't take the seller's numbers.
And that's standard practice.
Standard practice. Nuts. Yeah, I know. It's heartbreaking because right now the deals are so tight.
Yeah.
It's so slim, the margins, right? So when it comes to insurance, it might throw you off. You might go, I now have to update certain things in the building to make sure that I can get insurance or whatever. So that might throw you offside with the deal, right? And, you know, we're looking at heritage buildings, you know, certain things like that where you go, yeah, this policy, this guy's owned this policy or this building rather, and insured it under one policy for the last 30 years.
Yeah.
A couple of things that we see when we're replacing policies. For one, it's actual cash value versus replacement cost.
Yeah.
When you're going to a CMHC loan, and I think CMHC is a huge topic that I discuss a lot because a lot of insurance representatives haven't dealt with that. If they don't deal with this every day, they're going to run into issues when they're trying to close. So you might get a quote, it might be really good, it might be an actual cash value or not replacement cost, whatever it is. There's certain wordings that the CMHC lenders are going to need you to have. And then we run into issues where, they're not going to be willing to give you replacement costs on an older building. So now I'm running around, you know, I'm closing in a week. You thought you had insurance in place that you needed.
Yeah.
Turns out you don't. What happens there, right? Sometimes you don't close, and that's very expensive. Those things are super important to understand, is that you should, for one, if you do have, you know, a building that's older, typically newer buildings are going to have a lot more offers. You're going to have a lot more options. For buildings that are, you know, maybe unique in certain ways, maybe they're older, 100-year-old century buildings.
Mm-hmm.
They have heritage plaques on them. You know, those types of things, don't take it, like, for sure, get it requoted.
Yeah.
And I would say don't even get to the point where you have, you know, submitted an offer without having a discussion with an investor focused insurance person. Because I'll be like, hey, it's 2,500. I'll tell you it's going to go to 20,000.
Yeah.
Right. We're seeing right now, especially over the last 5 years with inflation kind of kicking off and that whole Pandora box opening, is that buildings are now underinsured. And they have been for a long period of time, but especially with the spikes, they're really underinsured. What happens with the commercial buildings when they're underinsured? Well, you run into co-insurance is one of those things. Your CMHC requirements is for an insurance company to waive those conditions of co-insurance. Well, we're not going to do that unless we're really comfortable with the square foot replacement cost of the building, right? So there's multiple things that happen. That building replacement cost needs to increase by 5 times. And then we have to waive those conditions, all that stuff. So there's a lot of stuff that goes in place when you're going from a guy that didn't have a mortgage. He probably just had like the least coverage possible to a CMHC where they want to insure their interest or financial interest in a building. So they want you to have certain coverages. So there's a lot more that comes into place than just, you know, even just a new client or place. There's a lot more things that
and kind of to your point, like about the process. So what we'll try to do is engage as early as possible, and we found that, you know, you're incredibly accessible, which is great. If somebody's either about to offer, has offered during due diligence phase, what's a general timeline for you to get some feedback? Doesn't have to be the end result, that's some feedback.
So the feedback can be pretty quick. So the biggest thing is getting all the information together. So when I send out my questionnaire, I like to have a conversation on the phone, because the questionnaire has pretty significant, it looks like a big list and it can cause some anxiety. So I always like to, you know, give a client a call.
I just filled it out. So it's not that bad. Okay. I did it in about an hour. So I think I was okay.
Motivated. I think to your point, Sam, as somebody's kind of in this process during the due diligence phase, there's so many things coming at them. I think, plug for us, we do a really good job of staying with you through the process, make sure everything's done. But, you know, that's one of them that, unfortunately, insurance, one of the most important ones, gets just kind of put to the back burner, which is crazy.
There's been a lot of times where, as a selling agent, we're 2 weeks from closing and now they're looking for insurance, and they come back to me and they say, "Oh man, well it's a designated historical building," and I'm like, man, I told you that when we got into the deal, right? So it's to that point. It's like, you know, you go to your mortgage broker to get your interest rates pre-qualified before you buy, right? That should be the exact same way. Any of those line items that say use actual numbers, right? Which is the mortgage, it's the taxes, it's the, you get the tax bill so you can verify taxes before offering. You need that insurance number, and it's definitely complicated more deals than it should have throughout my career.
So
Right, to your point.
What do you figure general timeline? Like so there's a questionnaire, you have an intake call, and give us a highlight of what those questions are, and then maybe timeline.
Yeah. So most of the items on the list are things that, like, who's the owner, who's the partners, closing date, all that kind of stuff. And then you have the age of the building, square footage, updates to the electrical, plumbing. So those top four. Is there construction that needs to be done? So we'll get into the whole world of builder's risk as well, right? Because I'm sure you guys deal with, either you're selling land and then you're building, or you're doing a huge renovation where you need builder's risk. So the most of those items you're going to have, I would assume. But typically I like to give a client a call, just because, just like mortgages, the bank doesn't like you sending half-ass applications, right? So for me, why would insurance be any different? I have to deal with an underwriter the same like a mortgage broker does. So I like to be very, very organized. And I think that's why we've had such amazing success, is because the underwriters, when I submit an application, it comes very organized with pictures, and I won't send it without it. So when I send it, it's really neat, it's really nice. And then the underwriter opens it up, and then they go, I know exactly what I'm, looking at.
Assessing risk.
And they're assessing the risk, and they actually give you rewards. I find they give you rewards with better premium because they understand it.
Right.
The less they understand, the higher the premium is going to be. So the clearer the picture that I kind of paint for them, the more comfortable they are. And I think the better results you actually end up getting, which makes sense. Right. So that's why and then for me, I actually like, as well, when you get to, a certain level, you also want to, pick your clients. Right. So if a client, doesn't want to get their information, why do you need this? Why do you want that? After that's why I like to do that setup, that intro call, to kind of explain.
Yeah.
It's like, I'm actually doing it because I want you to get the best results. Right. But you kind of be selective. You could see the people that are in this industry, and they're going to stick around, and they are organized.
Yes.
Right. And you only have to do it once for a building. You do all the information once, and now you have it in a drive. It's all beautifully done. So it actually helps you for, if you see a displacement in premium, now you can send it to the next guy to quote or whatever. It's like you have a database of each building. So for me, it's about being selective with my clients as well, because the more organized they are, the better I feel, and the better, loss, like for us, and in our world, loss ratios are a thing, right? And also being worried about clients lying or all that kind of stuff. Like, the more comfortable you are with your clients,
Right.
and also it saves them from themselves, right? Because you have sometimes with clients that maybe don't want to be truthful, and it's like, you got to tell me the truth, because if something happens, you're not getting a coverage. Yeah. So let me try to, because there's solutions to everything, right? If it's vacant, let's make sure we know, so we can actually put you on a vacancy endorsement or whatever it is, right? Like, so I try to, organize my clients, help them understand where I'm coming from, because for me, everything has a solution. We just got to make sure that we're on the same page, right?
Yeah.
It's communications.
And so once you have the policy secured, right, and let's say you're 2 years down the road or whatnot, is there a point where you should then revisit with your insurance rep, broker, whatever, and basically say, hey, can we, I redid the windows, can we reevaluate this? Or is that a standard practice? Because I know most people kind of set it, forget it, and 5 years go by, and all of a sudden they've upgraded the boiler, right? They put the backflow preventer in, and all the things that help out with the roof is new, right?
Yeah, and actually makes a big difference.
And a lot of people just go, oh, well, I got it, right? Let's not worry about it, or at least there's my experience. So is there kind of a point where someone should come back to you and say, hey, listen, I just did all this. Can we reevaluate?
So actually that's a really, really good note. So I think if you've updated the top four, plumbing, electrical, boiler, roof, if you've made those updates, give your insurance a call. That might save you 5%.
Right.
Really, like a roof, we might have it on our records that it's a 1950s roof. Who knows?
Right.
So whatever. Like, I've seen some crazy stuff. if we update that, you might get $2,000 off your
I
insurance.
just updated my roof. It didn't call it.
Yeah,
Tell me more.
yeah. So actually, so right now, so what I would say for everyone, because this is what happens when we're busy. We got so much stuff going on, and we're making money, right? For the last 10 years, we've been on a bull run, right? A lot of people have made a lot of money, so I understand why you wouldn't want to look at insurance. No, like I made 200 grand last week. Do you think I want to talk to you, Sam? Like whatever it is, people were busy making money. Right now, I find that you have time to look at your organization, either if it's your portfolio, your business, whatever one you want to look at, or both, and your life, like your current life is you have time to sit down and actually organize yourself, right? Because right now it's a little bit slower, right? Not for everyone, but you have that time where it's important. Net operating income, in commercial and investing is probably the most important thing.
Yeah.
Right. So what's the lowest lying fruit? It's insurance.
I'm glad you're on this topic. Sorry, I don't want to cut you off, but this is what I wanted to go to next, right? Which is like in the current market, for many people, things have become very tight, right? Groceries got more expensive. Gas is more expensive.
Yeah.
And so when you're looking at your portfolio and you're like, well, rents have contracted, cap rates have inflated. Our cash flow position is much worse than where we were, 2-3 years ago. That's why I love this topic, and I really wanted to dive into this. But yeah, so it's like, what can we start just picking away at? And that's one of the main reasons why I wanted to have you in today, to actually dive into that, right?
So for one, like I love how like passionate you are right now, but because like I love this career that I chose. It's like been the biggest blessing in my family's life. But also it's exciting, right? Like, and I'm excited that people like lately they're really excited to talk about insurance, because it's like,
so we're nerds. So anytime we talk about stuff like this, we get very excited.
So everybody that's excited too, right? They're all going to love this.
Yeah. So for me, like the biggest value that I can bring is for professionals like yourself, right? Like you're dealing with investors. If like it should be a feather in your cap for your services for your clients. So if you're a real estate agent or mortgage broker, the more you know, the better value you're going to give to the clients, the better clients you're going to get. Especially right now, they're looking at people that they're working with. Like they don't want to deal with someone that doesn't know, right? It's too expensive to deal with people that don't know. Yeah. So insurance is one of those things where, if you don't want to get involved, they just be like, I know this guy knows what he's doing. That's great value to your client, right? But it's the lowest lying fruit. So let's play a little bit of calculator right now. So we're gonna get my phone out right now, which usually we don't do, but this is for knowledge, educational purposes.
Right listener group.
Okay, so say if you have, like right now, this is a live one that we just did. So you're just paying $25,000. Okay, so we ended up coming in at 14.5. Okay, so you're spending $10,500 on the building. Okay. So if your cap, what's a cap rate right now? Like 5%, 5.5, 5. Okay. So divided by 0.055.
Yeah.
Just
$190,000.
$190,000. Right. So that insurance is so important that it can add $190,000 on one building.
Yeah.
Okay. So when we talk about your portfolio, millions of dollars, your REITs, all those people. Like for me, I want to scream at the top of the hill and say, you gotta look at your insurance.
Yes.
Like even if you like the guy, right? Like you got to look at it, and my clients do it too, I'm sure, right? Like, but it's so important because for one, if you're looking at a business, you're looking at apartment buildings, all that stuff, it's saving employees. You don't have to lay off that employee. Like it's actually making sure that you can survive this next 1.5 to 2 years. So insurance right now, to me, is the most important, accessible way to increase your net operating income.
Yeah.
And it's literally one call, right? Like understand that, right? So that's 200 grand. You're richer than you think. What you make?
Like, goes to tagline, I think.
Yeah. But those are real numbers.
Yeah.
We're looking at a portfolio. I mean, that's why, I think, I hear the clients, I hear the businesses. For me, as the average age of an insurance specialist, increases because it's an old dinosaur industry, right? These guys have been 60s, 70s that are owners. For the young people coming in to choose a career, I mean, right now is probably the best time to be in insurance, I find, because people are here listening to you. They need help.
Mhm.
They need advice, but they also need help, right? Like if you can lower, someone's, families are tight. It could be a grocery run, that $200 a year savings. That's a grocery run, right? Like it's so important right now that you get out there and you help people. So that's
Well, yeah, you knocked off $10,000 on one building, right?
Yeah.
That's a
Yeah.
substantial
Yeah.
amount of savings on insurance. I think people just don't focus. So I'm going to bring you back though. We had two questions.
Yeah.
I do want to get the answer. So client is interested. They've got a deal under contract or about to. They flip a note to you. They get on a call.
Mhm.
You fill out that questionnaire together.
Yeah.
What's the runway roughly to at least get some ideas on what we can put into the pro forma?
Yeah. So say in a normal circumstance where there's no vacations and no like all that
Yeah.
stuff, or like sometimes we have like events like catastrophe cat events, like where we've like up north we had a dam break and then we had 50,000 homes like in trouble, right? So if without that normal, I think in a good amount of days is 3-4 days we have.
Oh yeah, that's
Yeah.
okay, perfect.
Yeah.
And then, and again, painting with a broad brush, which we're trying to do during our due diligence phase. One of the things we're looking at is we analyze on the buy side at least 1,500, 2,000
Yeah.
deals a year.
Wow.
Right? So
Yeah.
pretty robust, pretty
Yes.
data driven.
Yeah.
So a general rule of thumb is we're trying to basically filter in as many deals as we can, and what spits out are the only ones to talk about.
Yeah.
One of the things is we're doing what we say we shouldn't do, which is just we're given $5,000, $10,000 for an insurance line, put it in. Is there a general rule of thumb? Like we'll know the
No.
building type,
Yeah.
right? We don't know the age of a lot of boilers, that kind of stuff. But is there
I think you should be, and like
hard question? I know,
No,
but just for the sake of
yeah,
being
for the
honest.
sake, I think you should probably be wanting to be around the 500 a unit.
Okay,
Yeah.
perfect.
Yeah. And I think
Super.
looking at market data, like as a realtor, rule of thumb has always been somewhere between, it used to be 400, then it was 450. Now it's kind of 500 a door. It's increasing, but I think rule of thumb is, at least what I've seen, is usually somewhere between 500 and 800 a door.
Yeah.
Like that's a good broad, as you mentioned, what's the complicating matters of the building, right? If it's an older building, stick frame with that, with old mechanical systems, then maybe go on that 800 side, right?
Yeah. Well, there's factors. There's different factors right now. So when you look at insurance as an industry, we look at everything based on our loss ratios. So we know which areas have higher likelihood of floods. So your flood coverage will be higher. There's certain areas in Hamilton, our friends in Windsor. If you live into a lake of water or a body of water, ancient lakes, that affects your insurance, right? So those are certain things that, like, area for crime. We've seen an uptick in crime as well. So you have certain areas that have higher rates for that kind of stuff. I think the biggest thing is if you know that, like, the water, I think is one of the things that should be on your radar if you're looking at a building, because for one, it's a necessity to have for the CMHC. And I've done podcasts where I just break down CMHC. So there's, look out for that as well. Because CMHC is one of those things that is probably a thorn in your side. Cause like insurance, like unless you do this every day, insurance professionals don't, like it drives them nuts because they're going back and forth with their underwriting team and then the wordings and all that kind of stuff. Like, there's certain coverages that need to be on the policy and it might affect the premium. But for the most part, I think $500 a door, I've seen it as low as $280 a door, depending, right?
Yeah.
So, and I've replaced policies that are, 800, 1,000.
Right.
And then we're at that 500. So we save them $500 a door, and then they're very happy.
And the listener group is smart enough. They know, like, look, to your point, if it's 100-year-old building, mess of a foundation and some, electrical issues, we get it. That's the other. So that's really helpful, I think, for sure. And what we'd love to do on another time, because I know we're running out, is to get you back and maybe talk specifically about CMHC and insurance for that. Because I would say 90+% of the deals we're doing either are going to have CMHC on it before they close, or the runway to get there in a short period of time. So that's why we wanted to bring in is we really only work with people that are in this specific industry, and insurance is so wide and so vague. Just like a mortgage broker, it's hey, just because they do mortgages doesn't mean they do these types of mortgages. Just because they do insurance doesn't mean they do this type of insurance.
Yeah.
So
Yeah. So shout out to what you just said, because it just makes your life easier, right? Like when you have a professional that goes, no, I got you, like you're protected with my knowledge. That to me is the most important thing. And um, it could be an environmental fees or environmental updates that you need to your CMHC or CMHC. Your contractor needs to be knowledgeable with this stuff, right? It'll cost you hundreds of thousands of dollars, and then interest right now, if it sits for another 6 months, that's another. It's mistakes are so costly right now. It can honestly, you've seen it. If people go bankrupt because they just make little mistakes. And right now, it's so important to align yourself with, professionals like yourselves and make your life a little easier.
So that's why we
Likewise,
get so
man. Yeah.
encouraged to bring in people that are in the know on specific, because you can mitigate a lot of that risk by just getting the information effectively from a phone call with a guy like you. So we're trying to bring that as much as we can. So we definitely appreciate you coming out, and listen, we want to have you back for sure to
Absolutely.
talk about. That would be great. Yeah, amazing. So how do people get in contact with you? How do they find you?
Yeah, so you catch me on my cell phone. It's 905-978-1721. 905-978-1721. Or you can also find me on Instagram, Sammy Tillo, SAMMYTILLO. And and I'll be around.
I'm smiling because you're the only one that's going to give their cell phone number, because I said earlier in the podcast, you're so successful. I text you, I get a response. So kudos to you. That was good.
And we'll put the handle and the email if you want in the show notes as well.
Absolutely, yes. I love this business so much.
You're truly one of those guys that is like, they can reach out, they can have a phone call, which is huge. So
love it.
Appreciate it.
Absolutely.
Awesome.
Thank you very much. Well, guys, thanks for sticking around. Like, subscribe, give us a comment if you have any questions. We're going to put in the show notes. We'll have contact information, and we'll see you next week.